What is up, guys? Welcome back to the channel. Welcome back to Crypto Unhyped, where we focus on the drama. Where we focus on the data, not the drama. And we got some drama right now. Bitcoin right at resistance and a massive event taking place in about 30 minutes. We got the CPI in Japan coming out, and you guys must be thinking like, what do we care about that? That could be a huge one, as we can anticipate a bit of a liquidity trap when an event like that comes out. So while you guys, my friends across the pond, are having turkey, enjoying Thanksgiving, and by the way, happy Thanksgiving. I hope you all have a great day over there. They get the CPI numbers in Japan, and since markets are closed in the US and Wall Street is closed, we don't really have anything going on and the liquidity is extremely low. That's why an event like this, when it comes out more bearish than expected, can spoil our party a little bit and could drag the price down again. We are currently sitting right at a key resistance point that, of course, we've been observing here on the channel for the past week or so in the 92,000 area, right? 92,500 is the pivot point on the 4-hourly chart where we would flip bullish again and break out of that current downtrend. All right, guys, I see there's a few of you joining already. Nice to have you here. If you are enjoying the stream, or if you got any suggestions, if you want me to talk about anything specific or look at any specific charts, drop them down in the chat and I will get into it. Now we're going to get into the data, but before that, into the charts, but before that I want to go through some stuff that we spoke about yesterday. Of course, I was live right at the time when the jobless claims came in the US, which of course was a very key event yesterday because we didn't have any other actual data. We were supposed to get the CPI yesterday and the GDP data, which has been moved to, all three prints of it have been moved to December 23rd. So normally we get three different prints, the first, then the second, and then the final. And usually we get the biggest volatility when the first print comes out. That has been moved, as most things lately have been delayed, to December 23rd. So unfortunately that's happening after the big announcement from the Fed on December 10th, where of course we will find out about the rate decision. Polymarket currently has priced in 85% more or less that we will see rate cuts in December of 25 basis points. So that's very bullish. Yesterday, of course, we also got the results, the last results for this week for the note auctions in the US. Let me just switch over here so you can see what I'm talking about. Here we go. Let's go to my X profile. They can see it. So yesterday I posted about it. By the way, guys, if you're following over here, then make sure to also follow over on X. That's where you can stay up to date with my full analysis all the time. And what we can see is that the Treasury auction, the Triple Crown, is complete, which means that the 7-year note auction results came in yesterday, and they were also at lower rates than the previous ones, which is of course great. It shows us that buyers are buying these notes at lower rates and therefore expecting better monetary policies in the future, aka rate cuts. And we had the same thing for the 2-year notes and the 5-year notes. So there is no problems in the market. Or no liquidity crisis as far as the debt sales from the US goes. That was the good news yesterday, alongside with, of course, that we had a bit of an action in the charts. Bitcoin started pumping. We broke that key resistance point that we've been looking at for the last few days, right at $89,000, and now flipped it into support. We confirmed above there and are now currently sitting under our pivot point. Guys, of course, I'll get into the charts in a second. I'm just waiting here to get a few more viewers on the channel before we really get into it. And in about 30 minutes, we get the data from the CPI data out of Japan, which could really be the only event that can really be a catalyst for the price today. While everyone's having turkey in the US, the Japanese data could really spoil the party a little bit. But fortunately, we made it above support, key support. I expect that $89,000 level to hold. And if we now get a bit of a run for liquidity, that the price drops down, I expect that to be a massive wick, because that will be provoked by market makers that take the opportunity that there's very little liquidity in the market right now, and therefore they can cause a big move, cause panic, trigger stop losses, grab that cheaper Bitcoin at the bottom, and then I expect a huge wick to get back above support. And then when markets open on Monday, I would expect to pump again. So keep that in mind. There's a huge trap on the horizon, and we'll get into it now. Of course, all the key levels, all the key events, everything that I'm looking at, you can also look at. You have it in the chat right now. You also have it in the description over on my X profile. Wherever you look, you can find the Unhyped data sheet, and that's of course where I keep you updated every Sunday. I drop it at 12 p.m. It's all the data that I'm watching in the next week, the macro data to watch. You can see here this week we were watching delayed data from retail sales, PPI, and then also CB consumer confidence, GDP annualized. That of course came out, but the third quarter GDP did not come out. And once again, coming out on December 23rd, core PCE was also delayed data from September, which has been moved to December 5th. So all this is, of course, not such interesting data for us right now because it's very outdated. And then here, guys, we have the global liquidity risk, the 2-year, the 5-year, the 7-year notes, everything we covered. I always let you know in advance before the week starts, so you know what to look out for the big catalyst that can really move the needle on the Bitcoin price. And then, of course, the performance for the current month always, and my key levels to watch for Bitcoin on the monthly, weekly, and daily chart. So make sure you download it. It's completely free. All you got to do is drop your email and you get it every month directly sent to your inbox. Then, of course, here we have the statistics for Thanksgiving for Bitcoin, which I posted yesterday on X as well. So quick reminder again, guys, make sure to follow over there. And there we can see that's actually a pretty bad day for Bitcoin. 66% of the time since 2010, we have seen red days. The volatility is usually pretty high. We got 6% moves, swings on Thanksgiving, and then also we usually have very slim returns. The average return is plus 0.14%. So not a great day overall, but today, of course, is a great day because we're sitting back above support. And now let's get into the charts. I'm going to kick things off here on that time frame that, of course, I updated you also about or on X already about. So you can always stay up to date with everything I do in and around crypto over there. Whenever I don't have time to post videos or make streams and stuff like that, catch it there quickly. Here's what we spoke about. So yesterday we were still trading right below resistance here. And that's of course here where we put in this low, and then it's very likely that in a downtrend always that we get an underside test of the prior range support. And there we had very strong alignment. We can see we've been trading right below that exact spot here since Monday. So we've been testing that level here a bunch of times, and yesterday finally we cleared it and flipped the 50 EMA, which of course on the 4 hourly is the same as the 200 on the hourly, or the 8 EMA, not exactly the same as the 8 EMA on the daily, but exactly in that ballpark. So now we cleared all these moving averages on yesterday's daily close. Of course, we confirmed that on all the time frames we're sitting back above these key moving averages, and now that level is now support again. We also here confirmed now a very nice ascending channel and are sitting currently at this key resistance point. Why is that so important? So as we can see here, we are in a downtrend, printing lower highs and lower lows all the way till down here. And by definition, what we want to do is we want to flip the last significant high in that downtrend to then flip bullish again here, turn that downtrend back into an uptrend, and then continue here to turn that into support and to really confirm it. We then want to continue with higher highs and higher lows. Next resistance above there would come in here in the $98,000 area on this time frame. You can see it in the shape of the 200 EMA here, and that is of course in alignment with a bunch of stuff that I already posted about on X as well. So guys, here's the easiest way. Like I said it 10 times now, I think, but really make sure. I see that I say it all the time on my streams, but I see a lot of you guys are following over on YouTube and subscribing there, but you're missing out on all this action here where I'm of course streaming as well. So earlier today I updated you on it. Yesterday I already updated you on it on the key levels. So if you want to stay up to date with what's going on in the charts and you want to catch the opportunity in both directions and don't get some moon boy messages of we're going to the moon, we're going to 200k, or we're going to zero, then this is where you should be following, because there I update you on the exact pivot points where the opportunities arise. Of course, guys, none of this is financial advice, purely for educational and entertainment purposes. But just look at this, right? This is very logical stuff here. We see 1, 2, 3 to the upside, 1, 2, 3 to the downside. So here now what we're trying to do is flip that bullish trend, get back above there. Then you can see on number 2, there we have the 200 EMA here, which of course then is also here very strong, aligned with very strong resistance across different time frames. We got into the daily chart in a second and a weekly chart, and you will see. So that's a key area between $98,000 and $101,000 is where I expect extremely strong resistance if we break the $92,500 level. We get some sort of resistance coming in the $94,000 range, which you will see in a second as well. But really, if we flip bullish here, I expect us to go up at least towards the 100K area. And that's then, of course, where it gets really interesting, as we have the 50-week SMA sitting just above there, right at 102,400 bucks. So we will see. Here you can see everything in this post. Read through it. Then you can basically take notes on the levels that I spoke about in this video as well, because obviously since then nothing has changed here really. And then we can see to the downside, what we of course want to do is we want to confirm that level that we broke yesterday after such a strong battle here at that resistance level. As we know, strong resistance then usually flips into support. Therefore, we want to hold the 50 EMA here and that prior horizontal here right at $89,000. And then we could, of course, get another touch point here as well on this ascending channel. But key to the upside is that we break this level. The good thing right now, of course, is when this data comes out in Japan is that we're sitting above support. So we could shoot a big wick down here and then come back up to exactly where we are right now. And in the worst case scenario, of course, we could see a massive wick to the downside. But like I told you guys yesterday already, I expect that to be an absolute liquidity trap where just market makers are taking opportunity of the low liquidity in the market and they want to steal your Bitcoin positions at a very cheap price. So make sure to not get trapped. And I already told you guys how I deal with it in situations like that when there's very low liquidity in the market, not only today, but of course tomorrow also markets close at 1 p.m. Then we got the weekend after. So it's a huge opportunity for bears here to mess around with us a little bit. And what you got to do then is, of course, de-risk, drop your leverage or get out of your leverage positions. And if you're still in any positions, you have to widen your stop losses, because these guys are aiming for their stop losses to liquidate you and then to grab your Bitcoin at a cheaper price. So really important to keep your eyes out on that and don't get shaken out of the market. Of course, if you see that the move continues, that it doesn't end up in a wick, then it's better to exit and wait for Monday when markets open again, because then I'm expecting a huge bounce if the price stays any lower than below $89,000. If we stay below there, I expect to recover pretty quickly and have another shot here at the resistance. Potential double bottom scenarios in play. I told you this a couple of days ago already, that for me it's likely that we find some very strong resistance here between $89,000 and $92,000, that we can get a potential double bottom here, especially on a day with very low liquidity in the market like today and potentially tomorrow or the whole weekend. Now we see a huge wick to the downside and then continue upwards to test this area. So let's go over to the daily chart now. This is all the short-term stuff that you have to look out for. And now I show you exactly where the resistance is coming in from. So here we can see the two circles, right? You can see the two circles here on that chart. And the first one here is, of course, very clear to see where the resistance comes from. We have the Fibonacci retracement where we're retracing this portion of the downtrend. I'll get to why in a second. But there we see that the 50 on that Fibonacci retracement, lines up perfectly with the prior dynamic support of the falling wedge pattern and the 50 EMA here all in the same area. So sorry, it's the 50 EMA here in the same area. So obviously a very strong moving average, prior very solid support, and a key Fibonacci level all lining up in one spot. We can expect some resistance in that area. The thing is though, we already flipped bullish on the 4-hourly chart if we get to that level, and especially if we can confirm 92,500 as support, and therefore I consider this here minor resistance. And as you guys know, I'm expecting a bounce from this area right here where we are now, as I said, potentially with a double bottom formation, but also a potential scenario that we continue straight up from here, get through this area, and then the key resistance comes in here. These are the two spots that we have to look out for. So as we just saw on the 4-hourly chart, we had a very hard time at that $89,000 level. Let me just go back there quickly, and just so you see how similar this scenario is now and how we're just laddering. Basically, if we break that 92,500 level, then we can put a check mark behind the 4-hourly chart and say, okay, we flip this chart bullish again. Now we go up to the higher time frames and see what we need to do there. And that was the same thing here. We came into the underside, struggled on the underside. Once we recovered that, we went straight up to the pivot point where the chart would flip bullish again, and therefore expect very strong resistance there. So the same thing here, right? First we aim for the underside. First one here is of course the dynamic support, prior dynamic support, this area. And then this here becomes very strong resistance as we're getting the same thing here. Prior range support, now strong resistance in alignment with the resistance from the falling wedge pattern and also the 78.6 on that same Fibonacci retracement. Now, why are we retracing this downtrend here? We're of course not only retracing that one, we're also retracing the entire downtrend from the top to the bottom here, and there we actually have very strong alignment in the 78.6 in the form of the 50. So that makes it even stronger resistance here in the $101 to $102,000 range. So there we would get our breakout, of course, out of this falling wedge pattern here that we fell below. Now almost hit the exact spot of the measurement of the pattern to the downside. So that's the area we want to break. And then if we get above there, then we have the same thing. Then we reclaim prior support, and then we have a shot at breaking the pivot point. So by definition, then once again, we want to break the prior high in the downtrend to flip bullish on the daily time frame as well. If we flip bullish on the daily time frame, then of course we're sitting above the 200 EMA here, above the prior high in the downtrend, but also then we would be sitting above the 50-week SMA on the weekly chart. And if we then close above there on a weekly closing basis, then of course that looks extremely bullish again. And then we have a shot here to get back up towards the 8-year resistance and to print a new all-time high. That is of course the most bullish scenario that's in place still. But what we really want to see here is, or what we're likely to see here, is an underside test of that key resistance area. Here we can see on the weekly chart how strong that area is. Also combining it with another key Fibonacci level where we're taking the retracement from the bear market lows all the way to the top. There we see that we have the 23.6. Then we have the prior dynamic support here of the bull market trend. We have the 50-week SMA and this key horizontal level here, all lining up in this area between $103 and $100,000. So the likely scenarios that we get up there, find a rejection, and then come back down and go down to our bear market lows. That has been the case every single time so far for Bitcoin. And here we see now that we are currently, this is why I think that this move is likely coming from the level where we're at, because here's where we're finding the strongest support before we head down towards the 200-week SMA. Anything above there is really not incomparable to the strength of the support that we found here at this current level. We have the range support here from the spring lows here from April, March. Then we have the 100-week SMA. We have the 78.6 on the Fibonacci retracement where we're retracing the current last portion of the uptrend from the April lows to the current all-time high. And then of course here the key horizontal that I just spoke about, all lining up in this area. Also with the 38.2 of course on that same Fibonacci retracement where we're retracing the entire bull market. So massive support here, and likely that we bounce from here now, revisit the underside here, and that's then where we either flip bullish again or we continue bearish. Lot can happen here in the next few weeks, but that's still the most likely outcome here, that we find a rejection. We covered it yesterday, guys. I showed you that this is very similar to what we saw a few years ago here back in 2022 after we printed the high in November 2021, the 69K top. Fell below the 50-week SMA, therefore confirmed that we're now going down to our bear market lows. Came down to the 100 EMA here, found the underside test, sorry, that's the SMA, underside test of the 50-week SMA, found our rejection there, and then ended up going down to our bear market lows. So that is a scenario that played out many times before. Same thing here also in 2017. As we can see right here, we lost the 50-week SMA right there, fell below, bounced off it, then here lost it, and then we got the underside test, which brought us down to our bear market lows. So that is the obvious scenario that will happen, but I spoke about it a lot in the past, that this cycle is very different from anything else that we've seen so far, right? We've been pumping straight through quantitative tightening. That's of course when the printers are turned off in the US. And since Bitcoin is such a massive liquidity sponge, usually Bitcoin gets on these massive bull runs when the printer's on, when quantitative easing is going on. And quantitative easing has been confirmed to start in December. 1st of December, Fed wants to start quantitative easing. That is usually then followed by rate cuts, and it's not something like a huge event that takes place that pumps the price immediately. It just loosens up the economy and makes the conditions more favorable for risk assets, and then we usually start pumping after time, right? First we need to see rate cuts, then ideally we want to see rate cuts again in January for the retail really to get an opportunity to start investing on risk assets, and then we see the bull market likely next year that we're used to, right? Where we see that retail investors start buying up altcoins and the altcoin market starts going crazy. That's the one thing we haven't seen at all. We've seen the top players, Solana, Bitcoin, especially Bitcoin pumping massively, XRP, and some other tokens as well. Some newer ones this cycle. Hyperliquid, for example, has been outperforming most things in the market. So it's been very strange, right? And that is, of course, because this market has been driven by institutional investors for the first time. Governments, institutional investors, they're not going to be buying fart coin and stuff like that. They're investing in the legit stuff, the blue chip assets in the crypto market like Bitcoin, Ethereum, Solana, and so on. And therefore, we haven't seen the classic alt season that we're used to, where there's these moonshots and everything is going crazy. And that also reflects itself very clearly in the total market cap charts. If you look at them on the larger time frames, as we know, of course, we start here with total one. Actually, let me just remove the volume here so we see a little bit more. There we can see that this, of course, is a chart that's dominated by Bitcoin, the total market cap chart, right? As we just got to look at Bitcoin dominance, then we see of how much the market consists of Bitcoin, and it's right around 60% right now. So 60% at least consists of Bitcoin in this chart. That's why it looks very similar to the Bitcoin chart. Then you go to the total 2 chart. This is of course here highly driven by Ethereum because it excludes Bitcoin. And there we can see that we barely broke the prior cycle tops here, and we were right there on a closing basis, but we broke down from the exact area where we printed our top back in 2021. Also our first top here in December 2024, and then we failed here exactly in the same area again. So no real breakout here, no revisit of the 8-year resistance for total 2 or total 3. So you can see that all these altcoins here, there we see the 8-year resistance connecting the tops here, the same line that Bitcoin has revisited here for the third straight cycle here, and that has of course been the current resistance for the top once again. And we were expecting, if we get an alt season, that the altcoin market also gets back to test that resistance, and that the market cap literally doubles. You can see here that at that current top here, the market cap was, the highest point was 1.2 trillion. If we would have gotten up there, we would have been close to $2 trillion, which would have meant that the altcoin market cap, excluding Ethereum and Bitcoin, would have doubled in size, which means, of course, for smaller tokens, microcaps and stuff, that they would have gone absolutely crazy. But we haven't seen that yet. We're still waiting for our retail bull market. We can call it that. So far, we've seen the institutional government bull market, where they filled their pockets and their balances. And yeah, of course, huge manipulation in the markets and so on. And we need to see now how it plays out after the government shutdown, with quantitative easing starting, with rate cuts starting, with more favorable conditions for investors and risk assets, if we can see a continuation of the bull market, or if we will have to wait till Q4 of 2026 till we hopefully then bottom out and go on our next massive bull run. And of course, how the economy looks by then. We've been living through pretty crazy times lately. A lot of stuff's been happening in the world. Everything is very strange, and the bull market and the crypto market looked just as strange as well. So guys, this is what you got to look out for now. CPI data coming out of Japan here. You can see it. This is not what I've been looking for, but here we see that this is in the US. Thanksgiving. We don't really need an economic calendar to know that that's going on. But if we just go over here to Japan. By the way, guys, if you're not familiar with these economic calendars, you can just go on investing.com. There you have one. You also have one on bitcoineasy.io, but we're currently updating the site, so everything there will be changed, and we'll actually here partnering with investing.com to have that economic calendar on the site then as well. But if we go now to the inflation data in Japan now, we can see that right here, 1830, Tokyo Core CPI is coming out tonight, and that's of course during times of low liquidity in the markets while the US is having Turkey, and therefore this could be a catalyst for a very steep drop or potentially also to the upside. And therefore now you know exactly where the levels are that you need to look out for on the smaller time frames, especially to be able to take advantage of it or to put yourself in a safe spot where you don't get liquidated when the market potentially moves very radically just for a few minutes or hours before then I expect recovers. Hopefully we get some good data. Hopefully the Japanese are happy with their results, and that reflects in the Bitcoin price. But here you can see the yellow lines. These are the clear lines that you need to look out for when the data drops. If we see a big move, then right down here at 87k is where the market structure would break here on the 4-hourly chart. As we can see, we have a local uptrend here printing higher highs and higher lows. We have not confirmed here this yet. We need to still print a higher low to continue in this trend. If we get down here towards 87,000, fall below there, close below there, then very likely that we come all the way down here, and then that's where it can get scary. There we see a wick below to sweep the prior lows here and to trigger some stop losses and to grab that liquidity down there. So guys, keep your eyes out for this. And yeah, we see some people here in the chat. Why would Japan crash? I hope I covered it just now. Both of you, White Rabbit and Josh, nice to see you here, guys. And yeah, this is all I'm looking out for today. Of course, very quiet in the market, no action, stock markets are closed and so on. So we got to look all the way to Japan to find some catalysts, and there's really nothing else, guys. Tomorrow I'm not streaming. As you know, guys, if you've been watching, my schedule for now is Sundays through Thursdays. But tomorrow I'm dropping a video, Saturday as well. It will be educational content. Tomorrow I'm going to get into my system, something that I mentioned in previous videos as well. And I will be breaking down exactly how I multiplied my Bitcoin position from the 2021 bull market down to the bear market, and then how I really utilized the bear market to set myself up in the best way possible to have the biggest profits possible during the current or last bull market. And then how you can do the same thing over and over again. Doesn't matter when it is, in bull markets, bear markets, you can make huge gains by utilizing the system. It's very simple but very effective, and it's especially for someone who does not have time to full-time trade but wants to get involved in the crypto markets without taking huge risks and also without having to stare at the charts all the time. It's all based on planning the entire cycle ahead basically, and really planning your buy levels, DCA strategy, how you cascade into those levels, and all kinds of strategic pivots and stuff to make sure that you always on the right side of opportunity. Okay guys, I think I have it all covered. Want to keep it pretty short today. I have some stuff to do now, and but I see in 2 minutes the data is dropping, so I'm actually going to stay online now here till the data comes out. And yeah guys, let's see. Maybe anyone else wants to drop something in the chat in the meantime. We still have a couple of minutes here. Maybe some specific chart that you want to look at, let me know. I'm going to be checking here, go through the charts a little bit. Bitcoin dominance, let's go on the high of time frames. There we can see here something that we haven't looked at on the channel in a while. We can see here that we are now trading right on this dynamic trend line here. Same thing, also holding the 100-week SMA here in alignment with that trend line, basically between a rock and a hard place here. 50-week SMA just above us here, prior dynamic trend line and this key horizontal area. Really, if Bitcoin dominance would now bounce from here and break back above 61%, then we could see a continuation of the trend to what we've always seen here for Bitcoin in prior cycles, that we do get up towards the 72 74% range, which has always been the top for Bitcoin dominance. And of course, this is still on the table, guys. A lot of people are saying Bitcoin dominance is broken down, alt season has started, and so on. But as we know, guys, alt season for now has been delayed, just like everything else in the US, due to the government shutdown. And therefore, we can still see this moving up here. And you can see on the monthly chart here, especially, we're still holding the structure of this trend. We're right here on support. So everything is possible. Of course, if we start closing below here now, 57% on a monthly closing basis, then we can expect Bitcoin dominance to come back down here towards the 39 to 35% range, where Bitcoin dominance always bottoms out in every cycle. So you can see here, nothing really has changed yet until the data proves us different. Let's see, guys, is the data out yet? 6:30. Let's see. In this, yesterday it's been extremely delayed. Keeps flipping back to Thanksgiving. Obviously, the investing.com thinks I should take a break here on Thanksgiving. Let's see. Let's go back to this. Inflation data. And numbers are not out yet, guys. I'm gonna stick around for a little longer here to see if we catch it while on the stream. As you can see here, 6:30, that's Eastern time in the US. Oh yeah, it is Eastern time in the US. So guys, 6:30, I don't know what I was thinking, but that is of course in 6 hours. So you guys can still enjoy your day here for a few more hours before we're gonna see some volatility from this event. I was thinking this is here in Central European time. Absolute rookie mistake, guys. But yeah, we still have a few hours left here. Let me get into the chat. I see Josh is posting some stuff. Will we ever release a signals group? Guys, a signals group. I'm not so sure about if I'm getting into those streets, but I'm definitely planning to discuss my trades in the future and to share with you how I go about more short-term stuff, how I trade these markets, how my strategy has changed over the last years due to the dynamics that changed in the markets and so on. So I'm definitely looking to share this kind of stuff with you. But a signals group, I don't know. I feel like all these signals groups are so shady. Like, people are just basically, the way I see it is a bunch of people are in signals groups. Then they are posting those signals themselves and selling them. So if you set yourself up, you join 5 different signals groups, and then you sell those signals to other people, and that feels like a chain of just bullshit, guys. So I don't really want to get involved in that, but I'm definitely going to get involved in some more real-time updates about trading and stuff like that, but not really anything like that. What else? Is Elon going to pump Dogecoin? I think Josh is fucking with me. Yeah, I don't know. Is Elon going to pump Dogecoin? What do you guys think? Is he going to pump Dogecoin? I'm not really following those kind of news so much. On a serious note, what odds do you give rejection at 100K or continue towards all-time highs? Well, this is really hard to say, guys. Of course, it depends. We have to look at a lot of things at these times. Like, I want to get into volume for a second, actually. I see a lot of people have these charts open all the time without even looking at volume, and they are celebrating a huge breakout here again. And then I want to show you something, guys, when it comes to volume, right? Like, if we look at this move here right now, if we look at the last few candles, the last few bullish candles here, look at the volume. Right? We had a massive volume candle compared to whatever followed. So we have a strong decline in volume. So there's no real conviction behind that move. So we can't really expect here with no volume to break high time frame resistance levels. So when we get to a level like 102K or 103K and we start revisiting the underside of the 50-week SMA, that is something massive that you should look at. So if we stay here on the 4-hourly chart, for example, and we go back here to more bullish times, let's say we go back here to the last portion here of the bull market where we printed the last all-time high, right? Just look at the volume on the bottom. clear inclining volume with a massive spike here. Then we started here going a little higher, but eventually came down. But while we were printing these huge trends here to the upside, the volume was inclining as well. And that's whatever you want to see, especially when you had massive support and you see that the price is starting to break support and going to the downside. You really want to check the charts as well if there's volume support behind that. Volume gives you a much clearer idea of how serious the move is that you're looking at. And if you combine it with price action, then you get a much better idea of if it's a trap or if this is a real move. So once we get to those levels, I'm sure we will get there eventually, then that's one of the key indicators that I will keep my eyes on to see if we can flip that level. But it's really hard to say now whether we're going to do it or not. It of course also depends on how it all plays out now in the beginning of December. Are we going to see rate cuts? And then how will it start all and continue with quantitative easing and so on? So a lot of variables that come into play in these times. In my opinion, if it wasn't for the government shutdown, if we would have continued the way we were going throughout the beginning of the year and summer, we would have recovered now in September, October, and would have gone on another leg up towards the end of the year. But of course, that was not the case, and therefore as traders we always got to be ready to pivot into either direction. Never fall in love with your bias. Always be ready for either direction when it comes to the charts. What else do you have here? So yeah, this is it basically. Yeah, hope we don't focus on the drama. Yeah, I agree, even though I said something else at the beginning of the video. But yeah guys, I'm gonna wrap it up here now, and really nice to have you guys. Thanks for joining me. Bit more of a quiet stream today than the last few days. The action's been picking up. Of course, Thanksgiving today, so can't really expect too much from it to steal you guys away from your families and stuff. Hope you enjoy your day. Have a great lunch, have a great dinner, enjoy your Thanksgiving. Wish you a great time with the family, and I wish us a great time here in the markets as well. And hopefully nothing too crazy happens today. Keep your eyes out on these key levels, especially on the 4-hourly chart and also on the hourly chart. Mark out the pivot points. You can find my post over on X where I have it all mapped out for you. You can see it here right now. Go there, drop me a like as well, drop me a comment, send me a DM. Let's get talking, and if you have any suggestions, always drop them down in the comments. I'm happy to new ideas of what I can change here on the channel as well. Right guys, gonna wrap it up here now. Thanks for joining me, especially if you're new to the channel. Really nice to have you here. If you want to join us here in Team Crypto Unhyped, do so by hitting the subscribe button, the like button, drop me a comment, activate that notification bell, all that good stuff. It really helps me out with the algorithm. Now I'm out of here, and as always, happy trading. See you soon.